and welcome to another live stream with me, Rauchenwald, on this beautiful Thursday. Summer is finally here, or more or less here. I hope you all had a great week so far. Today we're again gonna we're gonna start by probably looking at GameStop. I also want to use today's stream to adjust some of my orders, so the stocks where I have shares set, or basically create the order, so at least the alerts where I would want to either get out of a position or cut my losses, or at least start a trailing stop. Now, before we jump into all of that, as always, let's get the usual disclaimer out of the way first, and that is also written down below here. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. With that, we can actually, where do we jump? We jump into GameStop, or wrong button, 1 second there. So if you're curious about the software strategy I'm using and the tools I'm using, you can find all of them linked in the video description down below. Everything that's not linked in the video description down below might be something that I'm just using on occasion and not regularly enough to actually share it with you. With that, I guess we'll get started. So yesterday we had some interesting movement in GameStop. I know it looks very confusing here. And some of the movements actually played out exactly like I expected them to. The last thing we ended our stream on was actually the interesting part, because while I don't fully recall the pattern from the top of my head, the last thing was that based on the pattern, we expect to reach at least 31.74 to 33.77. And based on the secondary pattern, we expect to fall into the area of 32.42 to 33.24. And we can see here that we fell exactly into that area. Still yesterday, slightly before market close. Now, after that, using Elliott Wave Theory, I'm gonna remove that one for now. And we're gonna remove that one for now. Using Elliott Wave Theory, we can, with the naked eye, notice that that appears to be an ABC corrective pattern, which would indicate that here we have the start of the next impulse wave. Now, the question is, if we zoom out a little, here we have the big wave, wave 4 down. So we currently look at here, wave 1, wave 2, and we assume that this top here is our wave 3. So that would be the, we don't have a pattern for that now here, because that would be wave 1, wave 2, and then that would be 1, 2, 3, 4, 5 to complete our wave 3, which exactly went to the, or into the area of the 238.2 to 261.8 extension. So if we were to add this as a wave labeling, we would now assume that we have wave 1, wave 2, and potentially wave 3, wave 4, and wave 5 now in progress. Now, that might just be overall the first wave that eventually then completes this 5th wave. So it doesn't have to be this 5th wave already. That will then be this 3rd wave. We'll have to drag those things out. But that might just be, as said, wave 1, and then we get a wave 2 and another wave 3 and so on. So I'm going to reset the scaling, which means we would expect, although here it was a little bit turbulent, we would expect that this here might be our next wave 1, wave 2, which means moving forward, unless I'm somewhere wrong with my analysis here, we would expect that the next big push, so that might be some anomaly that we for now will ignore, and that either is already the corrective wave 2, or that was the wave 2, and that here, or that might develop into ABC for wave 2. However, either way, based on that, if that's our new wave 1, we would expect the next push to happen into the area of 37.57 to 38.42. As a short reminder, while it's not outlined in the Elliott Wave Principle book that you can read by following the link in the description down below, so you can read that online for free, and I really encourage people to do it, or you can get a physical copy like I did. It's not mentioned there, but based on my experience, very often the 3rd wave will bounce on the 2618 extension or the 2318 extension, or somewhere in between. As it happened, I'm gonna put another extension back there again, as it happened in this case here. So where we bounce exactly in that area here. Now, where do you come from? You come from here, yeah. Additionally to that, or before we go to the additional part, So very often it's this area here. So whenever you see a move up and a small correction that does not retrace 100%, then you can, if the pattern is following Elliott Wave Theory, almost assume that it will reach that one of those two levels. Sometimes it will only reach one of those two. Sometimes it reaches then the 3618, 4618 or further. So if we really, really have strong movements, yeah. Now, obviously, those are not guarantees. It doesn't always happen. Yeah, there are also exceptions and so on. So those are just things that are probably or likely to happen based on experience. Yeah. Additionally, when we have a third wave, like we assume that we have one here, so that's a third wave. So we assume this is wave 1, wave 2, wave 3, wave 4, although wave 4 actually ends down here. Then we can use an expansion. So from point 2, and our point 2 technically would be this one. Yeah. So if we look at the bigger pattern, so then we can use an expansion from point 2. Oh, no. For this wave, 1, 2. No. Wrong 1, 2. So it's still this point 2. Yeah. Because here we have another 1, 2. Now here we have 1, 2, 3, 4, 5. So that would need, okay, either the orthodox point 2 is here or yeah, so that corrective pattern here might be a little different, but doesn't matter for the point I'm trying to make. When you have a third wave, you can pick point 2 as your starting point 3, which is this one or this one, and then 2.4 use the expansion, and then the 61.8% target would be the minimum for wave 5 that we often are going to see at least, and the 100% line would be the maximum for that wave 5. Sometimes it would go higher, sometimes we don't reach the 100%. So again, we're talking in probabilities here, but that's what I would usually use to determine in which area the price should move next, assuming my analysis of the overall wave pattern is correct. And like it happened here, we assume now that this here is going to be 1, 2, 3, 4, 5, or from here 1, 2, 3, 4, 5. And with that, we have one wave finished up here. The big question now is more actually about this part here. Is this here 1, 2? Then that would need to be another 1, 2 here. So since we are lower here we are at 25.73, and here we are at 26.05. In which case, this here would be 1, 2, 3, 4, 5, and we would not have finished this third wave yet. Yeah. But however, since we're already in this third wave, then potentially let's actually assume that for a second. So this would mean we have on one hand 1, 2, 3 not finished, 4, 5, and on the other hand, within that wave, we would have 1, 2, 3, 4, and waiting for wave 5 to finish this third wave here. Now, if we move that over here, and also then move that a little bit further. If that were the case, then that would potentially be the first wave of the fifth wave. But also for the fifth wave target, we would then move the expansion like this, and would then assume that our price target for finishing this fifth wave would be in this area here. In which case, we would expect that for this 1, 2, 3, 4, 5, we would only reach the 35 area for the third wave push, small correction for wave 4, and then wave 5 brings us into the area of 37 to 38. So that's where I expect GameStop to go in quotes, the nearish future. We'll at some point we'll have to start to zoom out a little bit, which will make it harder to label the smaller wave patterns. But for now, I think that's a pretty decent pattern to go with. So either we have multiple wave 1, 2s here. So since each wave itself subdivides into waves of lower degree and is part of waves of a bigger degree. So like, for example, this fourth wave here subdivides into, this fifth wave here subdivides either into an impulse, which would be labeled 1, 2, 3, 4, 5, or into an ending diagonal, which would also be labeled 1, 2, 3, 4, 5. And then the first wave within that fifth wave would subdivide into a leading diagonal, 1, 2, 3, 4, 5, or an impulse, 1, 2, 3, 4, 5, and so on. So it's possible that we're currently just working on wave 1, then we will get wave 2, wave 3, wave 4, wave 5 to finish this bigger fifth wave. It's also possible that I'm wrong altogether, but yeah, like I like to believe that I'm not wrong. Time will obviously tell. Now, other than that, Yesterday, I also sold SPY, or I bought a SPY call option. I have to say I got a little bit impatient and closed it yesterday a little early for a $200 profit. So the option cost $80. So for like a 140% return or so, could have let it run a little bit longer and actually make a bigger profit. Yeah, I don't know why I closed it early. Somehow I thought, okay, what if it drops again another $1 or $2? I probably could have made like 300% on the trade. Didn't check at midnight or towards market close. Market close would actually be at 10, so I didn't check how much it would have been worth there, but I think I missed out on at least 50% profit. However, the bigger point is my analysis was correct that we're going up. So we were lucky, we even entered a little bit too early because there is a corrective wave down here in some ABC form. Entered a little bit too early, but still got the option relatively cheap. Could have gotten it like $30 cheaper here, which would have increased the profit, but so be it. So overall, the payout is quite good, which brings me to the following conclusion, or not conclusion, but to the next step. So whenever I'm able to, or whenever I believe I see the current pattern in SPY, I can actually at market open buy 1 or 2 calls or sell or puts that go into that direction. I still have to determine how much to buy, so I obviously wouldn't YOLO the entire portfolio into that to then just be wrong once and wipe everything out, even though the returns could potentially be a couple 100% in a day whenever I'm right. But I still believe, considering that when I'm right and we have a acceptable movement in the direction that I expect, the payout is, 200, 300, 400%. Whereas when I'm wrong, I only lose the premium of 100%. So I still have to work on on my risk appetite here in quotes. So I'm currently torn between risking 1% of the portfolio or only 0.5%. So basically, depending on the portfolio value, say around $150, $180, or only half of that. So for the current portfolio size, only get 1 or maximum 2 options depending on the pricing. But overall, I think, this is going to work out very well because the profitable trades are going to be very often not just 100% profit, but 200, 300, or even more, which means, if I'm not mistaken, and if that works out half well, I don't even have to be right half the time, because if I lose, let's say $50 premium, or let's say $100 premium. So let's Monday and Tuesday I'm wrong, I lose $200, but Wednesday, Thursday, Friday I'm right, and each time I gain, even if it would just be 100%, but let's say 3 days I'm wrong and I lose $300, but 2 days I'm right and I actually have a 200% return, then it still would be a net $100 extra. So I said and that would be assuming it's just a 200, just in quotes, 200% return. But by getting into the options relatively around market open, so maybe waiting a little bit for the initial volatile movement, which then also leads to the option prices to adjust a little bit. Hopefully also, I'm not sure if that movement would increase the volatility and with that drive up the price, or if that movement actually then immediately reduces the volatility and then the prices get cheaper. Either way, there are still a few things to figure out, but I think overall it's going to be a nice strategy that doesn't or won't take up too much effort, that should allow me to also grow the portfolio further. Other than that, today we had an alert for NEO. There we had the assumption that we might have an ABC pattern playing out here, and for wave C our profit targets would be those 3 here. I now bought $50 worth of NEO here. It bounced up again. That potentially could be some very, very, very strong 1, 2, 3, 4, 5. Would need to be a diagonal in that case, because wave 4 retraces that for either way. If that correction is already done, we're going to have to zoom out here, because there might be a bigger, no, there is no bigger, oh yeah, there is a bigger pattern here. So however, that bigger pattern would be 1, 2, 3, 4, and we would look at a very big diagonal right now, because we already went into the area of wave 1. So our stop loss for this could actually be at $2.07. because if we go below that, then this is not a huge impulse wave pattern. So now I'll have to figure out how to add that stop loss. Yeah. So for NEO, we would want to. There is the. Is there something conditional, terms, conditions? No, like order entry. No, there is no orders. Order entry is the one we have here. Yeah. 1 second, I'm gonna ask Google. Conditional orders. Okay, there. Oh, that's for orders. That's in the order window, but can I not, if I go here to NEO, trading tools? Order presets, what if? No, we don't want to analyze what if. Charts, manage market data. Okay, markets open. Yeah, GameStop starts to rally up. We start good into the day. I'm reading on the side. For my $30 puts, we're actually gonna quickly do that first. So that would be the. Oh, I have to bring that over, yeah. So for my $30 puts, just make sure to refresh that. And so they are currently at a 1,500 profit. Question is if we don't reach the full profit today, we would need to go to, or maybe if we go to the $37 range, I might end up rolling them already today. So if I roll those options, so for example, to the GameStop, if I roll those options for next week's $25 options, I still would get $180, so times 4. So yeah, let's see how that goes. So if I roll them now, rollover options, refresh list, puts. So load roll 2. So if we roll them to next week and down to the 25 strike price. No, not. Let's try this again. So for next week is the 14th, and the set strike price, we'd want to roll it to the 25. I don't know why it opens that stupid pop-up, but yeah. Doing something wrong here. 25. So there's no select thing. I can, okay, obviously put. So when I double click, nothing happens. When I press OK, now it has it. Okay, so create orders. Limit price 53. Cost impact. Credit, $200 credit. Huh? Oh, okay, price is probably going up while I'm clicking around here. Or not, yeah. I mean, obviously one shouldn't get greedy, but by rolling them to next week down to the 25 strike price, I would obviously get a much lower premium, but it also would be less likely. The low here is 25.20. The overall bigger low, we are now, yeah, zoomed in a little bit. So if we zoom out, would be below 20. But on the other hand, if I roll them now, I also only lock in the current profit, which is also not bad, to be fair. And if I wait one more day, I on one hand get more premium potentially. So I tomorrow, if we stay at the same rate, I would just lock in the full 2,000. But then also that would mean that next week's options are cheaper because it's also we get paid a little less because there's 1 day less for them. And depending on how high GameStop goes, the premium for the lower call options would also be cheaper. And then the question is, would I want to, for example, sell a $35 put option? And if I do that, then can I still sell 4 contracts, or would I only be able to sell three contracts? Hi, Olga. Yeah. If you on occasion share your, I think yesterday you mentioned your first name, yeah. So then I can maybe remember it. Otherwise, I'll just say hi, Olga. Great to have you here. It's like a tough decision always between like taking profits in quotes and rolling the options, and especially rolling them down, or waiting to get more of the more potential profit. And however, then tomorrow, I said, the prices for those options will be lower. And if GameStop is higher, then they will be even lower than they are now. Although I should get for the 25 put, as said, right now the middle price would be 168, and I could sell at least 4, maybe 5 of them. And if I right now buy back my 4 $30 puts, I would pay $123 per piece, or $124 with the fees, but I got $500 for them. So, which, however, means that on one hand, if I sell the 25 put now, I could potentially till the end of next week make another $170. But I'm sacrificing $124 here, so it's actually just adding another $50 for next week. Or I wait till tomorrow, hopefully GameStop, because tomorrow obviously the curve looks different. So if tomorrow during the day, let's say tomorrow at market open, if we'd still be at $32 where we are right now, I could lock in almost the full profit, so 95%, instead of sacrificing instead of sacrificing a couple $100. So it actually makes sense here to wait till tomorrow, yeah. And then instead, tomorrow then close that option. Ideally in the evening, so like close to market close, which tomorrow would be then. So as we see, the longer we wait, as long as the stock stays above 30, the more profit we have. So like closing them tomorrow, close before market close. So like 9:45, for example, or not even 9:45. So even at 8 or so in the evening would potentially already lock in almost the entire profit, and I could basically buy them back for $5 or $1 even. So to close them out, and with that then sell new ones. So we're not gonna close them today. We're gonna wait. Yeah, and then question still is, how can I create a conditional order? Yeah? So I know now how I can modify an order. Okay, before the order can be submitted. Okay, that seems like I'm on the right track. So I know how I can modify an order, but the question is, how can I from the start create a conditional order? Because I would like to, for the positions that I'm holding, so yesterday we bought Barnes & Noble, a few shares. Position is right now break even. Yeah, so either that's ABC finished. Okay, there's some auto labeling on the chart, I guess. There we go. Get rid of it. So yeah, so I would like to add some conditions in terms of, okay, if we hit that here, I'm gonna close it out, although that would be a 90% loss, and I might just hold it in either way. And on the other hand, on the upside, to if we hit that here, I would also close it out. So like how to add a take profit here. Like Interactive Broker is really a great broker, but the learning curve to get things done the way one might want to do them is relatively steep as well. Yeah. I also hope that it's not going to take too long. So it's the same article or not, like conditional, or it's literally the same article that didn't help me before. Okay, so modify condition, but that is for an order. That would be here. Here it could say modify. Oh, there we actually cancel that. Oh, no, that's for the 100 calls. That's different. Modify condition, and there we can now configure our conditional stuff. Or cannot. Drag securities here. Yeah, but from where? So basic, yeah, conditional. They have to undo the basic, or like, I don't know, allow this order conditional. So drag securities doesn't work if I have that on another screen. So no, it doesn't work. Doesn't work. Doesn't work. Well, how great is that? How do I drag securities? Yeah. So from where? Okay, that doesn't work. Okay, I will have to look that up. So yeah, still can quickly check. So for SPY today, I actually will stay out of it because based on the movement. So on one hand, we yesterday got in because the assumption was that this might be we get a push up for wave 3. I think we had it based on this. Not sure, but yeah, might be grow to the next extension level. But yeah, it's hard to see a solid pattern here, to be honest, right now. So I'm gonna for today stay out of it. And once there is again a clear pattern, I mean, this way it's actually clearer. 1, 2, might be 3, 4, and now wave 5. So although 3 doesn't really bounce on any of the usual extensions, if we focus on this one here, and we would still have room to grow. And if we focus on this one, it's obviously going to be even higher. Yeah, so we would expect it. Yeah, that's just one more point to 536. So that's not really a huge leap. Yeah, so we're gonna stay out, but I assume that we're going up here. So anyway, yeah, beauty we are holding, and there, for example, I would want to have. Yeah, again, if we go to the in this case, if we go to the downside because we entered here, I could actually, for example, have a stop loss here because if we touch this point, any pattern that I saw is anyway invalid. And on the upside, however, I can define multiple potential areas, at which point I would just add a trailing stop loss that moves from our buying point upwards further. Yeah, there we have just an option, so it doesn't matter, although I'm going to be probably maybe wrong with that. So there's going to be the ABC that plays out, and by June 21st, it will not be where I thought it will be, but that's okay. It just was a $20 option, so not too bad. NEO, as said here, I would go with the stop loss here, even though it's still like more than 50% loss in that case on the $50 that I invested. but if we reach that, then any pattern that I thought would be wrong. And if we go based on the bigger picture here, it actually works out quite well. So we're at the 78.6 retracement here, went a little bit through it. So possible that we have some ABC pattern or at least a corrective pattern down here, and that from here we'll now start our next wave up. But yeah, immersion, where we bought in yesterday, so there also we'll have to check this wave pattern here to determine, I mean, we already have the alerts for it, but instead of having the alerts, it would be kind of smarter to say, okay, for example, if we touch this point here, just close the position, so that it doesn't, if it were to happen that it rallies further down, that we avoid a bigger loss. Even if the position is just very small with, I think we put $50 or $100 in there as well. Robinhood we don't have right now, but there, it's actually interesting. I figured out in Motive Wave, yeah, never stop learning, but I figured out that I can also instantly place a trade when an alert happens. So it's kind of like, in quotes, limit order. Or no, it's like I can either place a market order or I could even place a limit order. So I could for example, say when we hit this here, automatically place a limit buy order down here. I would assume that from here we retrace. Yeah, so but yeah, so they will have to watch. GWAV, that the pattern is already invalid, so it's kind of like, yeah, I'm not gonna close it as said, so either it recovers or that's just gonna be a total loss eventually. CRKN, yeah, similar thing. So there would have my stop loss potentially here, even though that also means it's a 90%. Yeah, then there it also doesn't make any difference to close it or not. Although I should put this a closing, so like a stop loss in quotes at the points where my analysis just becomes invalid, because even if I only get $10 back from that position, then it's still better than holding on forever. Or is it? I have to think about that. And then Barnes and Nobles, it's going to be similar to work out the pattern, and then based on the pattern, determine where I would want to have my stop loss on one hand, but on the other hand, also like at which point I would either want to take profit or at least add a trailing stop loss, so to not have it go into loss again. And I would like to do that for the simple reason, so I don't have to constantly watch the stock. Yeah, so that if something moves or happens when I'm not watching, that it still does what I want it to do in quotes. Yeah. Question is if I can do that in a way. Question is if I can do that in a way that that it also works so that the orders are submitted so that my computer and with that Interactive Broker and or Motive Wave don't have to run. Obviously for the alerts in Motive Wave has to run, but question is how I can do it with conditional stuff in Interactive Broker if it's then submitted or not. Yeah, and like you pointed out, I got that already from our yesterday's conversation that they are connected. Yeah, so that there should be some correlation. Kind of like NVAX and GME, both stocks run simultaneously, just delayed. I haven't looked at NVAX. There's also a long list of posts that I saw. Oh yeah, that one. That one runs differently, yeah. But I love Elliott Wave Theory, even with the naked eye. I mean, not always, but here 1, 2, 3, 4, 5. Yeah, although 5 might not be finished because 5 would also need to subdivide into 1, 2, 3, 4, 5. So there could still be room up, but the bigger thing is here. The bigger thing is here on one hand, that would need to be there. Even here 1, 2, 3, 4, 5. A, B, C. So we have wave 1, wave 2, and now here said we have our 1, 2, 3, 4, 5. 5 maybe not finished, but the bigger thing is that with that we can actually then from here to here, so that would be potentially the finished wave 3, where however it's possible that we still get a little bit higher because that last that fifth wave of that third wave could be not finished yet, so we would then adjust that. But it gives us nice retracement levels. So we would expect that and for that we would have to add the, 4 So yeah, like so 1.4, 21.4, that's the one level that's missing here. Yeah, since we have strong movement, we would potentially expect it to retrace at least down here, and potentially actually more likely to this mark for basically finishing this third wave, getting a fourth wave, and then getting the push in the fifth wave. Yeah, obviously it wouldn't happen in a day, and especially corrective waves can drag out very long. You can also use Kennedy channeling technique on top of that just to confirm. So we take our starting point, 0.2, and then drag the parallel to the tip or through the tip of wave 1. Whenever we have a breakout from this channel, it would indicate that we're now in the third wave. And now we can add our acceleration channel by taking 0.1, our potential 0.3, which is the current top, and a parallel through 0.2. And very often we would need to have a breakout to the bottom here in order to confirm that we are in the fourth wave. Yeah, so which means as long as we keep getting new highs, or as long as even if we go down here and then we go further up again, as long as we don't break out here, Kennedy channeling technique would suggest that we're not in wave 4 yet. Yeah. So based on that, we would actually also expect the 38.2 retracement. So it could be, doesn't have to be, but based on Elliott Wave theory, we would expect, or I would expect, that maybe we get some. So first of all, the option that this wave is not finished here and we go a little bit higher and we have to adjust everything a little. But besides that, that actually now we might get some sideways movement slightly downwards. So as an ABC, for example, that then eventually hits this 38.2 retracement. So that would be a 40% drop in stock value. And that would be the point where we would potentially enter. Yeah. So I could buy put options on this, but if there are options for NVAX, but yeah, like I'm gonna stay out of that. So options I like mostly for the premiums when we sell them, and for daily plays in SPY. I'm trying to get to enjoy them, but here we probably will just again, on one hand, set an alert at 30, because then then we would say updating the chart. Yeah, so. So because if we go higher, then that wave wasn't finished, and then that retracement would change. And on the other hand, we would set an alert. Yeah, I would just set it here. I wouldn't want to enter here, to be honest. It would be too little, but here, so that's at 1285. So we'll set an alert at 13. Yeah, that's wave 4. Yeah. So thank you for mentioning NVAX. So I think I looked at it a couple days ago or so, or maybe I didn't, but yeah, didn't get into that, or at least I saw it on Reddit, probably. Yeah. So anyway, yeah, GameStop is doing not much. Let's look closer if we get to see. So overall, I mean, that would be hard to label. So the low here, or not hard, low 31.43, low here 31. Okay, that one's lower. So for example, all that here in some way would need to be some corrective wave, either from here or from here. We're going to ignore that spiky thing as a fluke, but that would need to be a corrective wave. And then in here, it would be 1, 2, 3, 4, 5, for example. And then 1, 2, 3, 4, 5. Although that would only finish 2 waves, and then the drop would be too big. But yeah, we'll have to keep an eye on it. I think it will play out like this. So like we labeled it earlier, that basically we have a new wave 1, 2 here. And you can also again check. I mean, here we retraced further in that. I'm gonna call it a fluke. Yeah, like I said. So, but here we retraced further, but the overall retracement was to the 50% mark here. So if we were to trade based on wave 1, 2, we would set our entries at 38.2, 50, 61.8, and or 78.6, where that is the least likely one. So technically small entry, bigger entry, small entry, and stop loss would be at the starting point here. So that would have obviously worked out in this case. So we would have gotten 4 entries, and after that it moved upwards. But yeah, we're not doing that right now. It's gonna be, yeah, I don't know, like if it's worth watching. So if we will get stronger movement, I mean, it's already stronger movement. The stock already is up to more than 2% today. Our options are safe, or my options are safe. And yeah, 1 second, I'm gonna adjust my desk. So just muting the microphone so the noise doesn't annoy all of you. Can check Reddit for a second, or yeah, for a second in quotes. Um, yeah. So there was again another post that yeah, it's like about options are bad, blah blah blah. Where was it? Yeah, there are discussions that just maybe I'll answer those things later. Okay, I have to check the rest later. Boom, boom, boom. That I have saved. Let's check that real quick. So if there is something worth looking at. Yeah, I don't need to. They're just, oh, Riot, that's the one I wanted to check out. Yeah, so I think I already looked at it before, but Riot weekly. That's also almost with the naked eye. Almost with the naked eye. If we zoom in a little bit. 1, 2, 3, 4, 5 for wave 1. A, B, C for wave 2. 1, 2, 3, 4, 5 for wave 3. And then that would be 1, 2. So we didn't go lower. So that would again point towards a diagonal, where then we would need to have 1, 2, 3, 4, 1, 2. It's going to be hard, but that would need to be in some form A, B, C. And then 1, 2, 3, 4, 5, A, B, C. No, that one went lower. So A, B, C. Touch the 50% mark. Question is, that would be B, I guess. Yeah, so we'd B, and then 1, 2, 3, 4, 5. So we would probably go lower still here. But if I enter here at $6.60, then I still would have 50% risk down here. And that's the assumption that that's already the corrective pattern. The other alternative would be that it's actually in a down. No, we went higher here, so there's no 1, 2 possible. So and a lot of Fibonacci's, yeah, like so. Obviously, it's one thing to know where it will turn around, but it's again one of those examples where we see that the correction here turned around at one of our popular levels, in that case, the 61.8 retracement. And stay away from NVAX. I didn't see that earlier. It's my credo too, despite those runs. Yeah. As said, I think it might be. I mean, you anyway heard it, but I think it might be worth an entry, but not at this price. But if that is indeed wave 3 finish, then anywhere between $8 and $13 would potentially be a good entry, in my opinion, to then see wave 5 up. Depending on where it goes, we can then also roughly estimate where wave 5 should take us. So that might be worth it. And if not with shares, then if possible, like then just whenever it hits the extension, then at this point buy, I don't know, like the $19 call option, but as a leap, so with like months in advance expiration. But yeah, anyway, we were now at Riot, yeah. So Riot, yeah. Wouldn't want to enter now, and buying the call options now also makes no sense because it looks like we will go further here, so potentially to the 618. So around the $6.60 mark. So that's another 30% loss, which means also that the call options should be potentially 30% cheaper if we buy them from there. So we're gonna just add an alert, create alert. Wave 2 finished. Okay, back to GameStop. And I'm gonna put that on the side, and so we have the chart visible, and I'm gonna just browse through it right now to see what else there is. Okay, those are all other things that I can look at later. Yeah, the World Health Organization says that the bird flu has officially jumped to humans. Yeah, so it might be worth to consider stocks that perform well when there is like pandemic. Yeah, I mean, just to look at them. Also interesting, just gonna drag that over here for a second. So this one, cyclical industries are starting to crack. Small caps, transport, hotels, auto retailers, overall retailers, restaurant, airlines are all rolling over. And even here on those charts, it looks to me like that would be wave A, wave B, and now we would have wave C, for example. And if that's the case, then there's a little bit room down, but then we would get a push up. If we look here, it also looks like A, B, C, but with not much further downside. And the same applies here, A, B, C, also not much further downside. And then we should actually get a push up again. So, but just on a really, really quick glance on a multi-year overview, but in those industries, there might be plenty of stocks that soon have potential cheap entries and a turnaround. That we don't. Okay, there's nothing. Okay, that's about the short levels. Don't need it anymore. to go through that then later as well. Yeah, not making huge progress here in terms of figuring out the conditional orders, something I'll have to watch a few videos about later. And answering the comments I can also do later. Not sure if we will get a strong move today. I mean, it would on one way make sense. If this is only wave 1, 2 for the fifth wave, then we should get a strong 1, 2 and now wave 3 breakout. But even so, we would have we actually touched the 138.2, so that could turn out as an ending diagonal 1, 2, 3, 4, and then wave 5 would potentially bring us into the upper target area, which would then also conclude the 1, 2, 3, 4, 5. No, so that would be the case, but that one is here is based on the bigger wave 3. So 1, 2, 3, 4, 5. That one, yeah. So this would be potentially 1, 2, 3, 4, and then wave 5 pushes us into that final target area, and with that we would finish this yellow pattern potentially somewhere between here and here. That would also look nice in terms of an overall wave pattern. So yeah, we'll have to keep an eye on that. Question is if it will happen today or if in between we'll have some longer couple-hour correctional wave like we sometimes have, yeah, or tend to have. So I mean, we also have multi-day correctional waves sometimes. Yeah, question is, what's the time? 4:10, yeah, and yeah, then I think we'll end it here for today. So if we really get a strong breakout, I'll come online again later. But other than that, we have a pattern that we expect, and I have a bunch of tasks that I, in quotes, cannot do on the stream. So watch some tutorials for the interactive broker software, set up some conditional orders, reply to Reddit comments and whatnot. So, and also have a video still to edit and publish and whatnot. So, yeah, so I'm gonna call it a day now. There's going to be a stream tomorrow as well, as usual, I guess. And so with that, either you guys get to see me later if there is a huge spike of some kind, or potentially tomorrow. Yeah, so ja. Steff, ja, dann vielen Dank fürs Vorbeischauen, Steff. Ja, und dann potenziell bis morgen. Everyone else, thanks for stopping by. See you all potentially tomorrow, or if the rocket takes off, then later in the day. Yeah, till then, bye-bye.